Andy, welcome to EBCO. This is a business that I introduced to FSE a couple of months ago, and we've raised some finance for through the Midlands Engine Investment Fund. Really good business that is going places. For those people that don't know you, you are Andy Moss, and you're the head of fund for FSE, looking after the Midland Engine Investment Fund here in the Midlands. Really good to spend a bit of time with you, Andy, and just keen to just understand some of the challenges that SMEs are facing at the moment. Maybe you just give just a little bit of your background, and then we'll sort of get into the questions and go from there, if that's okay.
Yeah, gladly. So I lead the team for FSE that looks after the Midlands Engine Investment Fund, debt finance fund. Yeah. So not the whole Midlands Engine Investment Fund. I was with Lloyds for 35 years up until May 2020, and then had the opportunity of joining the FSE group to lead this team and get involved with the Midlands Engine Investment Fund, which has been great for the last 18 months. Yeah,
that's really good. So obviously your time with Lloyds has given you a really good perspective on SMEs and the challenges they face. So turning to the first question, Andy, the lending climate, the government has provided significant support to SMEs over the last 18 months, but now as the furlough scheme draws to a close, are companies ready to return to business as usual?
I think the answer to that is mixed, and it depends on certain factors, which I'll come on to. But one of the positive things that I was reading earlier in the week was the Lloyds Bank barometer for business confidence, and in August that increased by 6 points. And you have to go back to April 2017 to return to that level of confidence, which is confidence about trading future for the rest of the year and beyond into 22. So that's really good. And sectors to be called out particularly were manufacturing, which is good for us here, construction and services. We're a service-led economy, aren't we? But so that in itself is really positive. Clearly there are some challenges ahead in the form of having the right number of staff, having the right number of skills, and I think that shortage is going to drive wage inflation. That's the thinking. So in terms of things that businesses are going to have to really face into are things like deferred liabilities. So for example, we're getting into the thick of furlough dropping off, and we're getting into the thick of CBILS loan repayments. We're going to talk about deferred taxes, deferred rents, and potentially other deferred liabilities that businesses are going to need to plan for as they get their businesses into a full sort of working capital cycle. On top of deferred liabilities, there are other challenges that businesses face as well. So, for example, supply chain challenges that are right there. Some of the challenges that Brexit is presenting, and I think we're quite early on in that journey. Another challenge to consider, of course, is the transport challenges that we've seen, and so the logistics challenge within the UK, a lack of lorry drivers, for example, and then some of the worldwide logistical challenges like shipping costs, and recently we saw the blockage in the Suez Canal, which even this business has been a victim of a lack of supply chain. As a result of that, completely outside of their control. So there's good confidence out there, and increasing confidence. There are plenty of challenges to face into, but again, the thing that really impresses me each time I deal with SMEs is how resilient they are, how innovative they are, and the will to kind of win and to find a way. And so I'm absolutely confident that despite the challenges ahead, that business will come through.
So Andy, you talked there a bit about some of the challenges that are currently facing SMEs. Two of the things you mentioned that I picked up on are post-Brexit and post-COVID. So what does a business look like in a post-Brexit, post-COVID world?
From my perspective, I think it's going to be an environment where the effect of globalisation the challenges and the issues that owner managers are going to need to chart a course through. There are going to be more issues outside of your direct control. So things like COVID directly is a challenge outside of owner-managers' control. Geopolitical tensions, the mounting sort of urgency around sustainability and our need to become more sustainable. So I think businesses are going to have to think more widely about how they try and influence and manage their business, de-risk their business, if you like. So if we think about the supply chain issues going on, there's one cost, there's two, physical supply, and you think about costs are 4 times higher than pre-COVID for international shipping. So that I think that those things are those issues outside of the direct control of people in business is a real challenge to think through how we mitigate those.
That's interesting. And I think in all these things, there's always some opportunities to be found. So where might they be?
Yeah, I think, there are going to be opportunities for collaboration, for consolidation. I suspect that the mergers and acquisitions market will be really key. But I think businesses hopefully will look to embrace technology, innovation. One of the areas that we're spending a lot of time with at the moment is the circular economy, the world of sustainability. And we've funded, within the last 6 months, we've funded 6 businesses, whether that be from electric industrial generators to recycling of raw materials. So I think the whole circular economy presents itself as a really important opportunity for business.
I think certainly from my own experience of talking to clients in the marketplace, looking at the green issues and the sustainability, and EBCO is a great example of that, that is now on the forefront of everyone's agenda.
I think for businesses and for lenders, as we emerge from lockdown and restrictions and we see economic cycles improving and increasing, businesses' debt burden and their ability to service that debt is really something that owner managers and lenders are going to have a real eye to. And then liquidity, making sure that businesses' liquidity is at the right level, and that as you well know, cash is king, and businesses fail generally, or more so, for a lack of cash than they do for a lack of profit.
Yep.
And so I think that liquidity piece for owner managers to have a real eye to, and thinking about their working capital facilities in the longer term is really key.
So Andy, as you and I both know, SMEs come in all shapes and sizes. Some of them have a textbook backstory, but some of them always come with a bit of a explanation needed. In this diversified world, should high street lenders be the first port of call for small businesses, or is there another way?
It depends, I think. I think if lower risk businesses and lower risk propositions are looking for vanilla funding, I think the high street bank route is probably the route that businesses should take to start with, and then see where that gets them.
Sure.
Where businesses are perhaps earlier on in their life cycle, where they're at an earlier revenue stage, where perhaps they can't provide the financial trading accounts demonstrating future servicing capability, or can't get there on the security requirements that banks require, then there's alternative providers. And I think that what's really encouraging for business out there is the competitiveness of the financial markets as they stand. Liquidity is really strong, which is a great thing for competitiveness, and we're seeing new entrants into the financial marketplace. You know that only too well. And I think that's good for competition, and it's good for owner managers of businesses, the range of choice. And I'm talking about across debt and equity as well, where we're seeing a lot more funds come to market that are willing and able to support SMEs and want to get involved supporting SMEs. So I think that businesses should try and think about and take advice on this, but where do they sit in terms of their risk profile and in terms of trying to match that with appetite, and and try and have a look at where does that fit around price. So it's good, isn't it, to see lots more providers and CDFIs as well doing well. And then you've got the Midlands Engine Investment Fund as an example, a fund that's been designed to support businesses who can't traditionally source their funding. 2 debt funds, 2 equity funds. I lead on the debt finance fund, which is 100k to 1.5 million. And so, and we've really proven that fund in that sort of cash flow mezzanine space between bank and equity is really in demand for lots of businesses out there. So I'd encourage people, if they kind of don't know where to look, is to engage advisors and people who understand the market and what's best suited for them. But also there's the British Business Bank Finance Forum to be able to go and have a look at what some of the options are there as well. So I'm kind of really encouraged by the range of choice that's out there for owner-managers these days.
Andy, so I was reading earlier a report from earlier in the year by the British Business Bank that found that entrepreneurs from the Black and Asian community groups found it difficult to get funding. How can we, as people who are experts in this area, address that issue and support entrepreneurs from minority groups as they attempt to build successful businesses? Yeah,
and within that report was, of course, female entrepreneurship as well. So I think this is about communication and the finance community and the stakeholders within the finance community really try and communicate well to open up what is perceived to be a complicated, mystical kind of world of finance. And you and I know that it can be complicated, but we can demystify it for people. And I think it's about helping people realise and understand what lenders and what investors are looking for. So, in helping people build a business plan, helping people build a financial model which explains to a lender or an investor how this business is going to perform. So I think it's communication, it's the support that we need to give to minority groups and to help them understand the plight, if you like, or the job that a lender or investor is trying to do. And also a realisation that because it is a minority group, in whatever type of minority group that is, the credit worthiness rigour applied to the application of a business won't be any less. It's just, I think we need to help and support people to tell the story of their business and explain how this management team is going to deliver this financial plan, and trying to build confidence that finance is absolutely there for every minority group, just as it's there, just as it's completely there for those majority groups. But I think I do recognise that that there is a lack of confidence within those groups, a lack of clarity, and we need to demystify all of that.
And I think the really important bit you made there was about telling the story. And certainly in my experience of talking to lenders, the figures account for something, and in getting an understanding of those figures is right. But in understanding the story and the journey of where a business has been, where it currently is and where it's going, it is absolutely crucial in helping someone to kind of invest in the non-financial aspect of that business. Is that something you've come across before?
Yeah, it is. I mean, something that I learned from way back when was the way in which we look at how do we measure the capability of a management team, and I use this format: vision, plan, competence, and measurement. So, has this business got a vision? What is the long-term view? What's the plan to deliver that vision? So breaking it down into monthly, quarterly chunks about how are you going to plan? What's the competence within the business to deliver the plan? And then how are you going to measure success? So vision, plan, competence and measurement. And then how are you going to convey that to a lender or an investor, I think it's a really important skill. And again, there's plenty of help. Don't feel on your own out there. There's plenty of help and advice to be able to do that.
Yeah. Andy, we talked in our last little bit around the story of a business, and every business over the last 18 months has got a story about how it was before COVID, how it coped during COVID, and what it looks like post-COVID. Yep. So what 3 tips would you give to businesses looking for funding over the next 6 months?
So I would, as you may have gleaned from our conversation and from the amount of time that we've known one another, I really like to see businesses plan properly. Mm-hmm. So my first one would be plan with agility. So what I mean by that is really demonstrate the rigor in your thought processes. Create time to think strategically, to think tactically, to think about people, people within your team, to think about all of the things, and clearly think about finance. Mm. But we're living in a world that's very dynamic, where changes can be thrust upon you, and you have to react to those. Yep. But you still got to start with a plan. So plan as best you can, and think about how you convey that plan. Second thing is have the right people around you, and it comes back to that earlier point about vision, plan, competence, and measurement. So having the right management team and having the right competence is then really going to reassure a lender or an investor that you've got the right people to deliver the plan, the future cash flow and forecast that you're looking at. So that's my second one. And in terms of people, it's not just about the exec management team. You might need a non-exec director to hold the management team's feet to the fire, and then it's the kind of the right team, the whole staff group, that the right people that want to be there, that are motivated, that are value centred, that are really keen to be on the bus, as it were, as somebody once said. And then my third one is know your numbers. Mm-hmm. I always makes me smile when I watch Dragon's Den and I see people go on that show and come up, and when they're asked about their numbers, they can't recite their numbers. Now, it might be pressure, but the one thing that those investors and those dragons want to know, as a lender does, as an investor does, they want to know that you know your numbers. Yeah. Because if you don't know your numbers, that's something you need to improve. Numbers might not be your strength. Mm. So if that is the case, and I see that a lot, get somebody where it is their strength to help you.
That's really important.
And support you. So you've got to know your numbers. You've got to know your forecast positions, your margins. You've got to really understand your costs. You've got to look at your liquidity position. So really understanding your numbers now and into the future is something that I think businesses have to really plan and prepare for. So plan, get the right people around you, and know your numbers. So I think it's really important that owner-managers of businesses understand what a lender or an investor is looking for. Mm. And I know I'm stating the obvious a bit here, but what a lender wants to be able to see is, and to feel really confident about, is a business's capability to comfortably service the debt. Mm-hmm. The monthly repayments. We lend up to 5 years, for example, and we want to see a business's ability and have the confidence in the management team that they can service that debt. It might need a capital repayment holiday for the first 6 or 12 months whilst the revenue gets to the right level post-COVID and so on. Mm. And from an investor's point of view, the investor wants to see, when am I going to get the return on my money? How is this profit going to come back to me? And all of the time, of course, that's what they're there for. Yeah. They're not there for the good of the greater world. They're there for, as an investor, looking for a return on their investment and their asset. Yeah. So owner-managers that are looking at trying to raise debt or equity really just need to try and get into the mind of the lender or the investor. And I think that's a point that is probably not understood well enough by enough owners. But hopefully I've conveyed that with enough clarity.
Yeah, and I think that's absolutely right. I think there's you mentioned the word mindset there, and I think that's really important. Lenders do think in a certain way, and certainly when we're working alongside a business, we kind of use that experience that we have of being a lender and that mindset and getting the SME owner to understand the key points that a lender is looking for, which isn't always the same key points that they're looking at. Getting those aligned, we find, is often the success of getting a deal done.
Yeah.
Andy, that's been really useful. I think there's some really interesting content there that you've talked around some of the Brexit challenges, some of the post-COVID challenges, and I think also around how some of that levelling up is taking place, and also, what are the key things to communicate to anyone who is looking to invest or provide debt to your business. It really is about knowing your situation, being able to convey that situation and having a plan. And also, I think we've learnt in the last 18 months, understanding what plan B and plan C might look like, just in terms of saying, how do we react to the unexpected? Because that's what we've faced over the last 18 months. But I think, as you've said, there are huge opportunities out there, and really over the next 6 to 12 months, it'll be really interesting to see how SMEs react to that moving forward.
I'm feeling really positive about the future,
Yeah.
And so are a lot of other people.
Yeah.
We've got to hope for the best, plan for the worst, and I think we'll be somewhere in between.
Yeah.